Ladies and gentlemen, good day and welcome to the Punjab Chemicals and Crop Protection 2Q FY24 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Janish Karya from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Rayo, and good afternoon to all the participants on the call. On behalf of Antique Stock Broking, I welcome you all to Punjab Chemicals and Crop Protection Limited 2Q FY24 earnings call. From the management side, we have with us Mr. Salil Shroff, Managing Director, Mr. Vinod Gupta, the CEO, and Mr. Ashish Nayak, CFO. I would like to now hand over the call to Mr. Vinod Gupta for his opening comments, post which we shall open the floor for Q&A. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for joining the call today. With me are from Punjab Chemical side is our Managing Director, Mr. Salil Shroff, and our CFO, Mr. Ashish Nayak. So let me start my talk with acknowledging that the challenging environment that we are facing in the industry and last few quarters have been very challenging and we are facing really turbulent market conditions. However, I want to assure that the Punjab Chemical team has been working hard to adapt to these challenges and navigate these challenges. So let me first start this by addressing the elephant in the room, that is our revenue, which is lower sales in this quarter. Now, this is mainly due to factors like low volume of some products, due to high channel inventory. Also, a significant contribution is drop in this revenue is because of steep drop in product prices after re-entry of China in the market. So, overall pricing pressure and some volume challenges has resulted into lower quarterly sales. However, I am proud to share some of the positive news despite these hurdles. We have demonstrated resilience in these tough market conditions by maintaining and even improving our margins despite all the challenges that is coming from the competition. Some of our new product initiatives have also started contributing to our business. Let me outline some of the factors that have contributed to our performance, which is actually categorized in 5 buckets. First and foremost is product mix. Realizing that the market conditions are uncertain and quite turbulent, we started focusing on the product portfolio which are more profitable, and we started strategically emphasizing on those products and promoting these products with our customers. With this, we have been able to boost our profitability. This selective approach has allowed us to maximize the returns on our investment and also increase our market reach. Second aspect is cost management. We have worked aggressively to manage our costs effectively, be it logistics, be it fuel cost, be it people cost. Across the board, we have looked at costs very meticulously and tried to control, and this is also yielding good results. Third front is productivity and efficiency. During these tough times, as I have been telling in the earlier calls, that we have been investing in R&D and product development. Our teams have worked tirelessly to improve our operations, our efficiencies, and streamline the processes. This has actually allowed us to produce more efficiently and also reduce waste. Fourth is innovation and R&D. Despite all the challenges in the market conditions being tough, we are adding resources to our R&D team. We have added some more people in the last quarter, and we have added some more facilities in the last quarter. This is helping us to basically add new products, also to improve efficiency of existing products, and gain faster traction in the market. And the last and foremost is our customer-centric approach. In these tough times, most important part, we realize that we have to be in touch with our customers on a regular basis so that we keep on tracking the changing market scenario continuously, also evaluate the competitiveness in the market, and provide the product as per the requirement of the customers. This customer-centric approach has enhanced our brand loyalty. Our customers are appreciating this approach, and any opportunity they are seeing in the market, they are coming to us. Also, because we are able to service their requirement quickly, we get some advantage on pricing power also. So while we have faced a challenge and headwinds in terms of sales figure, I want to emphasize that our business is in strong position, and we are well prepared to weather this storm. We have not only maintained our profitability, but have also laid the foundation for future growth. Our investment in innovation and efficiency have put us in prime position to capitalize on opportunities as the market conditions stabilize, which is expected to happen in the near future. However, in near term, the turbulence has not gone away from the market. Demand continues to be sluggish. Price pressure is as intense as ever. We are putting all-out efforts to compete in this market and also finding opportunities to utilize assets to sustain this momentum and journey. In closing, I would like to express my gratitude to Punjab Chemical teams and to all our customers for their hard work and commitment during these challenging times. At Punjab Chemicals, we remain focused on our long-term vision for growth, for sustainability, and we are confident in our ability to adapt to these challenging times, overcome these challenging times, and ultimately thrive in dynamic marketplace. Thank you for your continued trust and support. Now I will hand over to the call to our CFO, Mr. Ashish Nayak, for detailed analysis of our financials. Over to you, Ashish.
Thanks, Vinodji. Hello, everyone, and thank you for joining us for our Q2 FY24 and H1 FY24 earnings call. I'll provide a brief overview of our financial performance for the quarter and for the first half. Let me first start by acknowledging the current market environment. We have been navigating global economic downturn that is, and various market disruptions. However, in the face of these challenges, I am proud to report that our company has demonstrated remarkable resilience and adaptability. On the P&L front, the revenue from operations for Q2 FY24 was 242 crores, and for H1 FY24 was 524 crores, led by growth in domestic market. Domestic market sale contributed 48% of in Q2 FY24 and H1 FY24 as compared to 38% and 43% respectively in the same period last year. The gross margin in Q2 FY24 was higher at 40.6% as compared to 35.5% same period last year. And for H1 FY24, it was 37.7% as compared to 36.3% same period last year. The increase in gross margins is attributable to the product mix and process efficiencies. As stated in Q1 FY24 results, we have put in a lot of focus on cost optimization measures. This, along with the change in product mix and improved process efficiencies, has enabled us to better the EBITDA margin, which stood at 14.6% in Q2 FY24 as compared to 11.2% in same period last year, and 14% in H1 FY24 as compared to 12.1% in the same period last year. We have been able to achieve major savings on power and fuel, primarily driven by the infrastructure upgrades that we have been investing in. The increase in our margins is a testament to our ability to adapt, innovate, and optimize our operations. There has been an increase in finance cost to 6.6 crores in Q2 FY24 as compared to 3.9 crores in the same period last year. This was mainly on account of a one-time interest cost of 1.98 crores in Q2 FY24. This was as per the Honorable Supreme Court judgment, which was made applicable to the entire industry for pre-imports against advance authorization during the period October 2017 to Jan 2019. I reiterate, this is a one-time interest cost. Despite of the volatility, our PAT was 7.5% in Q2 FY24 as compared to the 6.3% in the same period last year. And in H1 FY24, it was 7.6% as compared to 6.9% same period last year. On the balance sheet front, as on 30th of September 2023, the company's total equity stood at 317 crores as compared to rupees 281 crores as on 31st of March 2023. During the quarter under review, the company got a sanction for working capital from Yes Bank. This is in addition to the current limits enjoyed with SVC Bank. We have been working closely with our banking partners to optimize the finance cost. There was a marginal increase in bank borrowings to meet the working capital needs as on 30th of September 2023. In H1 FY24, the company has added fixed assets worth 27 crores. This is primarily towards the infrastructure upgrades. The company has focused on data-driven decision-making. As a step towards same, we are in the process of implementing SAP S/4HANA, an ERP software. The net working capital has increased from 63 days as on 31st of March 2023 to 72 days as on 30th of September 2023. While the inventory days has reduced from 61 days to 51 days in the same period, the receivables has increased marginally from 52 days to 72 days in the same period. Looking ahead, we are committed to a multifaceted strategy for growth. We'll continue to invest in our R&D, do further backward integration, improvement in efficiency, roll out new molecules, expand in new markets, and pursue strategic partnerships that align with our core strengths. We are confident that these initiatives, combined with our unwavering commitment to efficiency and customer value, will position us to not only weather the current storm, but emerge even stronger in the long term. I want to thank all of you for your ongoing support, and we remain committed to the delivering value and returns to our shareholders and all our stakeholders. We are confident in our ability to navigate these turbulent times and create a prosperous future for our company. Thank you for your time and attention. We are now open to any questions and comments you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jatin Damania from Swan Investment Managers.
Thank you, sir, and congrats on the strong operating performance in the margin of 14.6%. So just wanted to understand the couple of things. Now, you said that our gross margin has improved due to a better product mix and the process efficiency. So is it possible to quantify the benefits that we have got because of the improvement in the yield during the quarter, and how much sustainable this yield would be going ahead?
As far as raw material efficiencies are concerned, I would say somewhere in the range of as a part of my raw material consumption, I would say somewhere around 10 to 12% is the efficiency improvement that we are seeing. But then it's different across different products. Okay, some products is higher, some products we are still in work in progress. We are reaching there. As far as the product mix is concerned, I mean, it's impossible to quantify if I compare it quarter to quarter as to what's going to be the impact on the margin. So yes, but it has a positive. It has had a positive impact in this quarter. Yeah.
Thanks for that. But in terms of the product mix, we were supposed to launch 6 to 7 products in this financial year. So have we launched any new products or new molecules in this quarter, or the benefits of that new products will accrue from the last quarter of this financial year?
So I think, we are on track for some of the products that we sort of forecasted that we'll be rolling out. Some products we have started getting into commercial agreement, and we have started some commercial supplies in Q2. This momentum will pick up in second half. In some products, because of the current market condition, there is a wait and watch, because the Nivara customer is sort of looking to stabilize the market condition. However, our discussions so far are very positive, because customer is indicating that they are liking our product, they are liking our cost position, and our ability to deliver. So we are on track as far as this product pipeline is concerned.
So of the product pipeline which was there, because we are totally coming out with the 15 products, with 6 to 7 we were supposed to launch in FY2024. So how many we have already started commercial supply, and how many we will be doing it in second half? So market share of this product.
When we said 15 products, I think we didn't say that it is an FY24. That's a product pipeline. Now, I think I will probably not specify this, but I think the momentum is good and some products have got commercialized. We don't want to specify right now, but some products have got commercialized and we have started commercial supplies.
Okay. So that's it from my side. I'll come in the queue. Thank you.
Okay, thank you.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello. Am I audible?
Yeah, Rahul.
Thanks for the opportunity, and sir, congratulations for a very good set of numbers in a very tough environment. So first of all, sir, with regards to gross margins, so you did explain about the product mix and the product efficiencies. The process efficiencies. So typically going ahead, what could be the sustainable gross margins for us?
See, I mean, that's something which if you look at the gross margin trend, it has gone up from almost 35-36% to almost 40-41%. These are turbulent times. We take calls on month-to-month, quarter-to-quarter basis about the product mix, depending upon the market scenario. Every product for every market has a different margin profile. So this is a very dynamic scenario, and we are striving towards maintaining this. And let's see, I mean, hope for the best, how things pan out.
Mm-hmm. And sir, with regards to the the environment, we do understand the environment has been really bad, and so where do we expect in terms of going ahead? What is your take on the situation? In what time frame do you expect things to improve from the two fronts? One is the demand and another is price. On the price front, has the stabilization of prices been done? We understand from our industrial checks that the downfall has been arrested, and for last 1 or 2 months, overall the product prices have been stable. Of course, they have not moved up. So two parts to it. One is the demand and one is the price part. If you could share some thoughts on the same.
So I think on the product, let's first talk about demand. Demand is again very specific to the product and the region. For some of our products, demand is as normal as last year. So there is a pricing pressure, but demand has been normal and we have continued to deliver the volumes which were similar to earlier years. For some products, because of seasonality and inventory, the demand has not picked up. You are right in your observation that prices have stabilized, though at a lower level. Now, those lower levels are not sustainable levels, but at least the downfall has been arrested. Our sense is that this trends across various products and geographies should become clear by early Q4. And next year going forward, I think demand should become normal. Prices recovery is anybody's guess because I think this is a competitive market and we are all fighting to stay put in the market. And that's where our initiative to reduce cost, backward integration, efficiency improvement will help us to make sure that we continue to maintain our market share or even in some cases grow our market share.
Sure. And sir, with regards to product, I understand the consideration in terms of naming the product, but at least if you could share some details in terms of the number of products which they have launched or which have become commercial, and what kind of peak sales could be possible from these products which have been commercialized, the new products?
I think a couple of products have got commercialized at the moment already. Some more will get commercialized in the next half year. At the moment, I think when you talk about the impact on the top line and all, broadly we are looking at our company growing at 18 to 20%. That's the guideline that we have been giving for most of these products. So that's what will happen. Obviously, 1 or 2 products as they commercialize and acceptability becomes bigger because you know that in agrochemical market it's also about registration, testing of the product in the market, and so it takes maybe sometimes year or 2 for us to achieve full potential. But broadly, we are positive, very positive to meet our target growth profile in the coming year and maybe even beat that estimate.
Oh, so you are talking about overall 18 to 20% top line growth. Is that understanding right?
Yes, right.
And that would be at the current prices in the market?
At current prices in the market, I think this year anyway, everybody knows this is a challenge. So this year, our effort is to make sure that we beat last year's performance. That itself is definitely, I think we are all working towards it. But on long-term sustainable basis, we are looking at that kind of a growth. Yeah.
Sure. Sir, in your presentation on the R&D capabilities slide, you have mentioned about the 40% of new inquiries from the non-agrochem space. If you could share some more on this particular aspect, just needed to understand what we are trying to refer to and what is the kind of potential or what kind of, if you could share some more details on this side, sir.
So I think, you see, one is our dependence on crop protection is slightly higher. And in order to take care of market uncertainties, we have started looking at other segments which are specialty chemicals, which is catering to multiple sectors. Now, these are not related to agrochemicals, but these are, I mean, when I say multiple, it can be electronic segment, it can be something which goes in some specialty chemical applications, coating applications, etc. So nothing specific, but we are looking at multiple sectors where we can start developing the product and supplying to them.
Sure. And just last one, sir. In the previous call, you had mentioned about this registration of a product which was required in Australia. So you had alluded in the previous call that the registration in Australia had got delayed, and you had also applied for the registration of the same in Europe too. So, and you were expecting the same to happen by September or mid-October. Any feedback or any revert on that?
So I think both the registration, I mean, we have not got it, but we are on track. Maybe a couple of weeks, we will be basically getting the registration for Europe. For Australia market, we have already started talking to some customers. And obviously this year the demand is not good and it's an oversupply situation. But we have started discussion to resume the supplies of the product to that market also.
Sure. Thank you so much, sir. Best wishes.
Thank you.
Thank you. Before we take the next question, in order that the management is able to address questions from all participants in the conference, we request participants to please limit their questions to 2 per participant. For follow-up questions, you may rejoin the queue. We take the next question from the line of Pritesh Chidda from Lucky Investment Managers. Please go ahead.
Sir, in your comment, few products have grown, few products have flat, few products have declined. If you could just give the volume decline percentage for Q2 and H1, and could you just share the tonnage sold?
I think we will, we generally don't want to give product specific details.
No, I don't want product specific. I just want a blended. So if we have a X% revenue decline, just what is the volume decline? Is 2%, 3%, 5%? What is it?
It's a mix again because, see, the point is there is a price impact and there is a volume impact and the revenue.
Yeah, so that's the reason why I'm asking you the volume impact.
So,
is it single-digit decline? It's a double-digit volume decline. Some reference would be helpful,
you can have a look at slide number 15 of the presentation, where we are talking of the capacity utilization for both the sites, Dharabasi and Dalru, starting from FY19. So if you look at the trajectory for FY24, H1 FY24, we are almost half of what we did in FY23, the full year. So I would say in terms of volumes, I would say we are almost there. I mean, obviously, but this is in terms of, every product has a different product cycle, and all those aspects have to be factored. But in terms of absolute volume, because this is a multi-product facility, that's a general direction that you can get from that particular slide, yeah.
So which means the volume decline is not substantial. Is that the reference we should take?
Again, I'm saying this is a multi-product facility. So every product has a different price point and every product behaves differently and has different markets. So, it would not be fair to compare it apple to apple. But yeah, in terms of absolute volumes, if you look upon it, if I add up all the tonnage, that's where we are.
Okay. And in the 4 registrations which were lined up, there is continued delay. What is the registrations now that you have got out of that 4, or all the 4 are pending?
So, Vinod, I'll take that question. As far as our registration issue, please understand, we are a robust company, and our growth towards registration are always ongoing. To answer specifically, out of the 4, 2 we have already got the registrations, and 2 are under process.
And for those 2, the supplies have started?
It should flow in Q3, Q4. And the full potential would be in the next between 12 to 18 months.
Okay.
Because also you have to understand, Europe is not one country. Europe has many different states, so every state has its own, every country has its own parameters towards registration. So, and same goes in Southeast Asia, or like for example in Latin America, you look at Brazil, you look at Argentina, and so on and so forth. Yeah.
And the balance 2 where registration is left, for 1 you said you will get it in a couple of weeks, right? You are responding to one of the answers.
Please understand this registration issues, we have to work with these authorities. So they usually give some sort of a timeline, and we also built up some sort of a timeline because we need to plan our capex, plan the raw materials, plan the product and everything. So we are pretty hopeful that it should flow soon.
Okay. My last thing is, any reason why it's delayed in our case? Any key reason?
It's not because it is one case. In general, countries like, for example, Germany, countries like UK, the Netherlands, you talk Brazil, you talk Argentina, it depends on the product and it depends on the registration country. Sometimes you get it fast, sometimes you get it later. We cannot predict it. It's not particularly delayed because it is a Punjab chemical, but it also goes from molecule to molecule, depending on what data is required, what they feel is satisfied. If they feel satisfied, it goes quickly. If not, they come back to our consultant, and then they come back, and then we sit across and say, okay, we need to fill in the gap. Please also understand, all these data also take time to generate. It's not that, we can do it tomorrow. So 99% we follow the guidelines stipulated by each country in terms of registration. But sometimes because of different changes, maybe they ask for some studies. So that's where the delay is.
Okay. Understood, sir. Thank you very much, sir. Thank you.
Thank you. The next question is from the line of Darshil from Crown Capital. Please go ahead.
Hello, good afternoon, sir. Hope I'm audible.
Yeah, Darshil.
Yeah. So just wanted to ask in terms of our margins, like at current, like maybe at even lower revenue, we've been able to get higher margins. So as our growth been, so we can expect that now our businesses will be in 15% or 14.5% plus margins always, or how would you term it as that as fundamental due to our cost structure initiatives? Our margins are now always just going to be higher than what they were previously. That's the first question, sir.
Well, to answer this question, that's on the basis, if we look at the trajectory of margins for the last 3 to 4 years, that it's almost doubled. From single digit to almost 14 to 15% is what we are doing. As of now, it is something to do with the current product mix that we have, okay, and the markets that these products are being sold in. So while for the existing products as well, we are looking at newer markets with better margin profiles. We are also rolling out newer molecules, something which we keep on saying in each of the investor call. And the newer molecules that we are looking at, we are typically looking at molecules which are niche molecules, which are slightly higher priced and which have a better margin structure. So yes, obviously we are working towards improving the overall gross margin and the better margin profile. That's what we are working towards. Yeah.
Oh, sir, that's great to hear, sir. And sir, with regards to maybe the outside scenario, we as maybe not who someone in the industry, what can we see as an inflection point that we signaling a turnaround? Like what part can we you would say that okay, maybe like this is something that signifies a turnaround, on what timeline do you see personally that things will, like, the prices that we want can go back to what they have been? So, something on those lines, any, indicate from the macro side that, you feel, okay, if this is a timeline, then after this we'll be able to, turn around.
So, I think this question, I responded to this question earlier. There is nothing like going to be like inflection point. Yes, for product specific, there may be an inflection point depending on the season and the supply chain and inventory in the market. But yes, overall, this inventory liquidation is happening at an healthy rate. That's what we know. And gradually the conditions will improve. So, and then we are quite confident that the volume recovery should happen in the next financial year, followed by price recovery.
That's great to hear, sir. So, thank you so much for answering the question. All the best.
Thank you.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Hello, am I audible?
Yes.
Yeah, hi sir. Good afternoon and thank you for the opportunity. Sir, a few questions. So, from in your H1, if you can share what were the contribution of your two key products, metaconazole and metamizole. So, if you can just share that, what percentage of revenues in H1 you have from these two, and if you can share a bit about these two products in terms of competition. Who else apart from us manufacture, or what is our market share?
Okay, so I think rather than specifically saying that what is the contribution of the two products, all I can say that yes, we have been able to provide competitive solutions, and our plants are fully utilized for these two products. Yes, competitive landscape is there for one of our products, but based on our efforts to improve efficiency and being in close touch with the customers, we've been able to make sure that the capacity utilization remains healthy.
Right. I think in the beginning of this year you had mentioned that metaconazole you're looking at almost 100% growth. So are we on track for that? In this year, the first half?
So I think what we mentioned is our capacity will be fully utilized, and that continues to be the case. So last 12 to 15 months, our capacity is fully utilized, and we continue to utilize our assets fully. Yes, there is a projection from the customer on some upward demand picking up in next couple of quarters, and we are gearing up for that requirement.
Sure. And in the past you sort of mentioned that you have aspirations in the near term for 1,500 crores, which given the industry situation, you had sort of pushed it by a year or so. And then you talked about beyond that as well, 2,500, 3,000 crores. So I know, the industry has been very challenging. Can you just talk a bit about, given that context, how are you tracking for that number? I know these top line growth has been a bit tepid, but if you can just maybe apprise all of us what's your revised thought process on these numbers and targets.
So I'll add my points and then I'll ask maybe Sharil to add to this. Only thing I would like to mention is we are very excited about the product pipeline that we are building. And with this product pipeline, with our customer interactions, we are confident that we will be achieving these targets in near future. That's all I would like to say. I think we have been giving some growth projections, which I think based on our effort on R&D, product development, etc., will only get accelerated with time. I think I'll maybe ask Shalil to add if he wants to add something to this.
Yeah, so as Vinod said, our product pipeline is pretty robust, and the products which we have pipeline in terms of our order book position, you're right, we had mentioned 1,500 and we had tapered it down because of the environment and the inventory. Please understand that the order book position is just delayed. In fact, it is increasing. And as far as our product, as I said, it is robust, and we believe if we are in 23, in 25, 26, 27, we are looking at product to product, getting registered and making sure that the commercial production starts. So we are absolutely as per track in what we have been selling, and we are very excited. In fact, as we talk, with opportunities, there is always, with a downtrend in terms of industry, there is always an opportunity, and we are getting this opportunity. As even Vinod said that, our focus is agrochemical, but we are also looking at intermediate and specialty chemicals, and we are also very excited. There are a few products which we have already launched, already started giving, but as I did mention that this all will take anywhere between 12 to 18 months to commercialize.
Sure. Sure, sir, understand. And there was one more question I had. I think in the last couple of Concalls, you talked about your scaling up, especially in the Latin American market. If you can talk a bit about that, and I think there's a product called diflufinishan. If you can also talk about that, whatever you can share. How is the scaling of that market, and if you can talk about that product also, that would be helpful.
So I think on Latin America market, whatever efforts we have put in has yielded good results last year. We are now looking at some more countries in that market and some more registrations. Obviously, the challenge is that in the Latin America market, registration can be anywhere between 36 to 60 months. But work is going on. We have tied up with certain partners, and we'll continue to expand our presence in that market.
And anything on that product, if you can share?
So last year, I think we did good, and this year again, we have already started interactions with our customers for the next year's demand, where the season is slightly late in the year, but we have already started interactions and discussions with them as to how to grow our presence in the market. And we are confident, given the competition, given our product quality, and given the kind of service that we have provided them, we are confident that we will be only strengthening our position in that market.
Sure. Thank you. Thank you, sir. All the best.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Chirag Shah from White Pine. Please go ahead.
Hello.
Yeah.
Hello. Thanks for the opportunity. So just one very basic question. So on a scale of 100, what would be the realization jump for the new products, an average basket of the 15 products that we have spoken about? What would be the scale of jump in realization per kg or per ton, how you may look at it, versus our current average realization on a scale of 100? I don't want an absolute number, but how is the jump happening? That's first question.
I didn't really understand the question. Ashish, if you answered, then if you...
So I rephrase, if your realization is rupees 100 for existing current products, for the new products that you are launching, what would be your realization would be? How much it would go? Would it be like something like 20% increase, or it would be like 200% increase?
So, Mr. Chirag, I think Mr. Shalil has been mentioning that we are looking at products which are high-value products. Okay, and these chemistries that we are talking about are multi-step chemistries, which can be anywhere between 4 to 5 steps to 10 to 15 steps. So accordingly, the product pricing will be higher. Our primary focus has been to move towards products with higher value. Now, it's difficult to quantify at the moment, but broadly we can say that yes, we are looking at products which are of higher value, where I think our presence in the market can be long-termly sustainable and profitability also becomes sustainable.
Okay. And I think broad range you would like to indicate?
No, sorry. Just to add, as we have mentioned that we are, looking at higher value products, and we have already been looking at our EBITDA, as even Ashish mentioned that, we were in single, then we went to double. We are at 14-15%, but our target is to look at 18+, and we are very hopeful in the next 2 years with the product pipeline we have, we will be able to achieve what we have trying to accomplish towards our final goal. Yeah.
Okay. Thank you.
Thank you. The next question is from the line of Harish Beria, who's an investor. Please go ahead.
Hello, sir. I have a question about our working capital. So in the past, our working capital intensity used to be quite low, and this has increased quite significantly. And I can see that it's largely being driven by receivables. So, sir, what's the receivable days at which this should stabilize at going forward?
So if you look at my receivables trajectory over the last 2 to 3 years, it's somewhere in the range of 50 to 60 days on an average. What has happened, as I mentioned in my speech, as well as you can see it in the presentation, this particular quarter and this particular, this quarter, I would say the percentage of sales in the domestic market has been slightly on a higher side, which also means that because the credit period in the domestic market is higher as compared to what it is in the international markets or exports, I'm saying. So yes, the profile and because of it, the number of working days for receivables has gone up from almost 50 days, 52 days to 72 days. But again, at the end of it, these are normal sales, and we expect the realizations to happen very soon. And as far as going ahead is concerned, yes, our focus will continue to be on both exports as well as domestic, and it will all depend upon the product mix that we are able to, depending upon the dynamic situation and the times and the opportunity as it presents itself, what call we take at that point of time. So while we are working towards reducing the working capital to a great extent, but it's nothing alarming as of now. It's well within control. Yeah. And on the other side, if you look upon it, my inventory has been very well controlled because that's something which is in my hands. Receivables is something, it's market-driven. Again, in case of domestic, the credit period is relatively longer as compared to in exports, yeah.
Yes, I think our working capital anyway is the best in the industry right now. Just a follow-up to this would be, as we scale up in Latin America market, will our receivable days also increase? Because generally we see Latin American AgChem works on higher working capital cycle?
To some extent, yes.
To some extent, yes. I think, Ashish, let me add, but broadly our operating model has been slightly different. And so that's where we have been slightly conservative in terms of making sure that our working capital cycle does not go up. And also we sort of make sure that the money is received. These are the two factors for Latin America market. So our approach is slightly conservative, and that has worked so far. So we think it will remain in the similar range, maybe slightly, yes.
Makes sense.
And just to add, in the Latin American market, we work with global companies. So our reliability towards this credit is not, on Argentina, but it is because it's a global company. The payments either come from Europe or US.
Okay. Makes sense. My second question is a question about our Lalru facility. So, if my understanding is correct, now Lalru is only being used for specialty chemical, or does some of our CMS or AgChem products also get manufactured in Lalru, or is it just dedicated to specialty chemical products?
Okay. Our Lalru facility is mainly for pharma products and specialty chemicals. We don't make any AgChem products on that side.
In that case, how much capacity do we have left at our Derabasi plant to further utilize, given all our plants? I think we have 15 molecules in pipeline. How much capacity do we actually have in Derabasi?
So I think, if you look at our product pipeline, there are products which are in specialty chemical segment also. So the specialty chemical segment will go towards increasing capacity utilization for Lalru. And products which are related to crop protection, we are looking at freeing up some capacity in Derabasi, and maybe we are looking at making some investment to create some capacities in Derabasi. Also, as we have declared earlier, at the same time we are also started looking for a new site where we can look at our future growth, especially in crop protection and specialty chemical business.
Okay. And I think in the past we used to talk about some of the intermediates that we were going to manufacture for pharma companies. Have they already been commercialized? And what's the status on that?
So I think for some of these products, we have given samples to the customer, and those samples are under approval. As the samples get approved, we have also started looking at a facility where we can make, so we have started mapping our facilities. typically the approval cycle in pharma is slightly longer. So that process has started.
Okay. And my final question would be about, I think there were a few questions from earlier participants as well about realizations and volume mix of our products, and I think you guys answered that more or less our volumes have been maintained this year. So the drop that we see in sales is largely due to realizations. Is that a correct inference?
I think it's a very dynamic situation. See, the completely top line is a factor of the volume, price, product mix, market segment, etc. But yes, I think so. What our capacity utilization is showing that we have been able to maintain the capacity utilization.
Okay, I'll get back in the question queue.
Thank you.
Thank you very much. The next question is from the line of Suresh Pal from Peace Wealth Capital. Please go ahead.
Thanks for the opportunity, sir. My question is, this year, can we achieve any sales growth? I know there is some pricing pressure is there, but at least can we expect some sales growth?
UPL is one of our key customers. We have other key customers as well, and we are regularly in touch with all the customers. And as of now, we are, depending upon the market scenario and the liquidation of stock, we are taking joint decisions on product-to-product basis. So we are very closely in touch with all our key customers, and we are keeping a very close watch on the markets and the products. Yeah.
Just to add.
Okay, so that will be. Please continue, sir.
No. Just to add what Ashish said, that globally with all our customers, we are back to back in touch to understand how the market is, not only within the agro sector but also in the other intermediate and specialty chemical sector, to ensure that what we are working with them is more on long term. And always I have told you that all our agro customers who we work with own registrations, and in which we become part of their process in registration. So it's a very robust and a very different way in which we work towards the customer and the product profile. I just wanted to add that, yeah.
Okay, but if we see 2-3 years down the line, then they definitely will grow, right, from where we are today, right? Is that correct understanding, sir?
Of course. I mean, you have seen where we were and where we are. You have seen our Q1, you have seen our Q2 results compared to what is happening in the market. So I think that replies for itself.
And we can expect some margin growth as well, right?
I mean, I did mention on somebody who asked me, so the product pipeline which we are in, that today we are at between 13 to 15% at EBITDA, and our ultimate aim and ultimate area of moving in the next 2 years is looking at 18%, 18 and plus.
Okay, thank you, sir. That's all from my side.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So just one question. While we are talking to our international customers, what is the feedback that we are generally getting now in terms of whether they are still in wait and watch mode, the inventory situation has started normalizing, or is it still going to take some more time to get it normalized? So just our dialogues with those customers in terms of the industry dynamics, your views on that. Thank you, sir.
Okay, so I think one good part of this whole this current challenging time is that none of our customers, where we are talking about new business, product or anything, they have lost any interest. It's just that everybody realizes that this is a phase in the industry that will also pass through. Okay, so broadly that discussions are going on at the moment, which are in healthy direction. In some cases, I think the product commercialization will happen quickly because those products are not impacted by current supply glut. Whereas other cases, I think it's more of a wait and watch for the customer to assess the market situation and see where does the market stabilize. So it's a mixed bag, but overall, I think we have not lost interest from any of our customers. We continue to be in dialogue with them. Everybody understands that the pressure that has come mainly from China, this again is not for the first time they are seeing it. And our dialogues, and they are very keen to work with us on the products as the situation becomes normal.
Sure, sir. Thank you and best of luck.
Thank you.
Thank you. The next question is from the line of Viraj K. from SIMPL. Please go ahead.
Yeah, hi. Thanks for the opportunity. Question is largely on the product mix part. So if you can just give some perspective into, say, the top 5 products, what will be the share of revenue from that in the, say, H1 or Q2, 24?
Siraj, I'm sorry, I'm not in a position to comment on the product or the values that these top products would be contributing. Yeah, but what we can tell you
would there be any material change compared to FY23?
Pardon?
Would there be any material change in terms of contribution from top 5 compared to FY23?
It's a dynamic situation, and month to month, quarter to quarter, things are changing.
No, I'm talking about H1, sir. I'm not getting into exact percentage. So I'm just saying.
H1, I would say some of the products continue to be there. There are some new products which have been added into the top category. Yeah, that's how it is.
Yeah, so just to add to Ashish, as you said, from Q1 to Q2, I mean, Vinod did mention in his opening remarks that we have now got a R&D team in place, and we are looking at process parameters, and we've been working for over last 24 months. And that definitely has given us a better leverage in terms of our competitors. And, our pricing has been very, very good, and we have worked very good. Unfortunately, in terms of specific numbers, specific details, we'll not be able to give. Also, certain products are technology-driven with the customer, and that's all under confidential agreement.
No, so basically what I was trying to get at is, if you look at a contribution margin, right? So Q1, there was a margin at the gross level was quite healthy. Q2, we've done a very high contribution margin. And if I look at the annual basis also for last 6 years, the peak was 41 in one of the years, when the pricing was favorable for the industry and even for us. So, in an industry where, in our business, where more than 70% is contract manufacturing, and where typically all the RM efficiencies one derives, a majority is shared with the customer. So, in that background, and, if I have to add another new product also, the scale of what we are expecting, will start flowing in from Q3, Q4, some bit, and materially from FY24. So I'm just trying to understand, was it that whatever inventory adjustment we had to take bulk was done in 23, and, while the prices are at where they are, we got that benefit of low RM as well, which is aiding this. So I'm just trying to understand, when we see the product mix part.
So it's a mix of both, but it's also a good efficiency improvement which we have done looking forward. And of course, working with the customer in terms of raw material as well as, so it's a mix of both. As I said, very specifically, we cannot discuss because with due respect of your question, but with folded hands, we cannot do that because we are under confidential agreements. And on such calls, it's not appropriate to talk on what product margin, what we did, what not we did. But overall, the focus is what you have seen from Q1 to Q2 will flow for this year and more in the coming years. As I said, we are very, very optimistic. We are working with a very strong product pipeline. We're looking at products with higher revenue in terms of, per kg. Like we're looking at, we started with oxalic acid, which used to be $1 a kilo. We went to $25, $50. We're looking at $100, $150, $200 a kilo. So, the total product mix, the understanding of what Punjab Chemical is changing and which you have been seeing, and we'll be continuously working towards that achievement.
Okay. I'll just take this follow-up offline. The second question which I had was on the capex part. And in this kind of adding up with the overall ambition which we shared, say 1,500 crores or 18 to 20% annualized growth. Now, if you look at a Derabasi plant, right, so we are already at the very optimum level in terms of what we could go to at the existing facility. And given the kind of variation one has to play with the number of products, and that will just keep on getting more complex with the new products being added. So there's a limitation in terms of the volumes utilization you can derive from the facility.
I think my friend Vinod just replied to this question 2-3 minutes back.
Right. So my question was really that even with the debottlenecking or additional investment, will that still be sufficient to achieve the 1,500 crores kind of a target? I mean, obviously with the Lalru scaling up.
Let me repeat what I said. I said, Lalru, specialty chemicals will go to Lalru. That's where our capacity utilization is only 55%. That can add significant revenue. In Derabasi, right now we are doing incremental improvement and some addition to our current assets so that it can take care of our immediate need. For long-term needs, we are looking at a new site. We have already started working on it. We are exploring several options. That's where our future growth will come from. So we are working on 3 different fronts to make sure that whatever projection that we have given, we are able to cater to that particular requirement.
So because any new site will take at least a year and a half to kind of come on stream. So in the interim, you think growth, the facilities which we have and with the investment we are making is good enough to achieve the growth we are expecting?
That is good enough to achieve, and we are looking at some other options as well, which I think we are looking at multiple options. So at no moment with the capacity, availability will become a challenge for business growth is what we are working on.
Okay, and just one last question. Given the way the environment is in the AgChem space right now, there are a lot of competition. They're either shutting down plants or putting them on sale. So is there any thought process in terms of, say, acquiring any of those units to accelerate the growth which we are expecting?
So again, as I said, we are looking at all kind of options. We are looking at all kind of options, and whatever suits our business and wherever there is a synergy, that is the kind of decision we will take, which can be any of the options, including what you told just now.
Okay, thank you. Good luck.
Thank you.
I think we can take last 1 or 2 questions and then we can close it, please, because we have another call in the next 15 minutes.
Sure. We'll take the next question from the line of Rohit Ohri from Progressive Shares. Please go ahead.
Hi, sir. I was just trying to connect the dots. Will we look at some of the customers, like UPL is looking at opportunities in pesticides in Jiangsu, Corteva is looking at some collaboration, NK is looking at new products, and Adama is looking at further more opportunities in South America. While at the same time, if we see our international business has dropped from 62% to around 51% or so. Going forward, do you anticipate that you'll maintain this mix of around almost 50-50 in domestic and international market?
Yeah, I think our focus will continue to be to maintain this balance. These adjustments, what you're seeing on quarter-to-quarter basis, is mainly to manage the current market situation where we wanted to make sure that our business continues to work, our assets continue to get utilized, and we maintain our performance. But in long run, I think that ratio will be what we have been having in the past.
Okay.
And just to add to Vinod, please understand that, because of the inventory levels, as he has said, so that's the reason. So please don't look at quarter to quarter. Please understand, today the market situation is very different. Look at overall what Punjab is and the way the trend has been. So my earnest request would to please focus on that and not look more quarter to quarter basis, especially when the market is very quiet. Just to add that, yeah.
Okay, thanks, Halil. Last question is, assuming that this year we can grow at the GDP growth rate of India, do you anticipate or do you have any visibility for the next year to probably grow at twice the growth rate of India, or maybe 3 times the growth rate of India?
I think Vinod did explain well in his opening remarks and over the few questions. So, as we said that this year becomes a challenge because of the environment and the stock positions in the market across the world. We are very optimistic, and the way we look at our product pipeline, the way we have discussed with our global customers, we believe the growth is there and we will maintain that.
Okay, sir. Thank you. Thanks a lot.
Thank you very much. We'll take that as the last question. I would now like to hand the conference over to Mr. Sumit Khaitan from Orient Capital for closing comments.
Thank you everyone for joining today's call. We are Orient Capital, Investor Relation Advisors to Punjab Chemicals. For any queries, please feel free to reach out to us. I now hand over the call to Shalil sir for their closing remarks. Thank you, and over to you, sir.
First of all, thank you so much for all your time and your wonderful questions. Please forgive us if we have not been able to fulfill many questions, but please understand that the business and the confidentiality we are in with some of the customers, we cannot do that. But we try to do it to our best of our ability to answer your questions. And as you know that we have Oriental Capital and others who are there, you can always reach out to me or to the CFO. And once again, thank you for your time and wishing you in advance a very happy Diwali, Happy New Year, Sal Mubarak. Thank you so much.
Thank you very much. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.